So I am very excited about this episode because it's one people have been asking about for a long time. We get questions all the time. People saying, oh, let's talk about finance, bring on people to discuss finances. And so we've listened to you. And today we've got Benedicta, an acclaimed accountant who not only has her own practice, but goes around educating people on finances, getting out of debt, things like that, building wealth. And so today I basically took all the questions you've been sending me and I took it to her. I asked her things like, how do you get out of debt? How do you really get out of debt? How do you build finances and wealth? Is the UK the best place to be if you really want to grow and build sort of generational wealth? We talk about leaving the sort of black market and sort of covert living into living above board and being registered and things like that. Should you register as a company? Should you be, if you work 9 to 5 and you have a side hustle, should you approach that? These sort of topics are what we discuss. So this is one of those episodes where you're going to learn a lot. And so I would encourage you to listen to the full episode, get involved, ask more questions, or let us know what you think in the comment section wherever you're listening to this. But anyways, enough talking. Enjoy the episode. Benedicta, thank you so much for coming today.
Thank you for having me.
I'm really excited about this episode because it's one of those episodes where we actually get to talk a bit more about sort of actionable insights, right? Things that people can actually take away and do stuff with. So if you're listening, well, you might be driving, but I was going to say get a notebook out, but maybe that's not the safest thing to do. But I almost want to start with where you started. So how did you get into being an accountant, being the most famous Benedicta in London? How did that start?
First of all, having a unique name. In terms of being an accountant, growing up, I was always good with numbers. I think I was saying this the other day, I remember being involved in maths competitions and winning and stuff like that. I'm not a genius, but yeah, I like numbers and I'm good with numbers. Going through school, always did numbers, GCSEs, A-star, all of that kind of stuff. And then going to uni, I like numbers, but I like business as well because I like money, because I'm Nigerian. So I studied business economics, and basically as part of my degree, they force you to obviously do all of the basics of business. So marketing, finance, accounting, what else did we do? Just the basics of business, HR and all of that kind of stuff. And so one of the modules that they made us do was an accounting module. But we had financial accounting and management accounting. So they split it up. So I didn't even know up until then that there were two types of accounting subjects. So yeah, we did financial accounting, absolutely hated it. I'm like, what's the point of this? It's boring. But then the next year I had to do management accounting. Again, these are compulsory modules. To finish your degree, you have to do it, right? And so when I did management accounting, I had an epiphany. I was like, wow, this is amazing. I was like, wow, this is a formal subject. I've been doing all of this stuff my whole life up until now. So from secondary school, I would always plan and budget and, be looking at the variance. So, okay, how much do I need to balance out? So these are some of the concepts that you learn in management accounting. And so I was like, oh, wow, if this is a whole actual subject, then I should probably do this. I'm quite risk averse. So I was like, okay, yeah. Because if I wanted to do economics, but I was like, okay, if you study economics, what job do you do? It's like when you study to be a doctor, you're going to be a doctor, right? And you can specialize. So I was like, oh, economics on its own, I'm not really sure what kind of job I might do. But if I just do accounting, then I know what job I'm going to do, right? And I always knew I'd do business because my parents are entrepreneurs. And like I said, I like business. So I knew I'd do that. So I was like, but just in case business doesn't go well, let's start out with accounting. And I know that even if I take a break, if I can always dust off my CV, dust off my qualifications, and I'll always have a job. So we did management accounting. In uni, I took a placement year. And I got a management accounting placement at the Department of Health. I didn't even know this was a thing. I was like, what's a Department of Health? I had actually applied for an NHS placement,
Okay.
And then when I did it, they were like, oh yeah, you're being posted to the Department of Health. I was like, the Department of Health? What's going on? And so I found out obviously that's a government department. Now I know better. It's one of the government departments. But that was like the beginning of my finance career. Graduated, got a graduate job in that same place, moved to other government departments, then went into consulting at like the top 4. I worked for 2 of the top 4 and now doing other things. But along the way, it's just been the fact that I liked numbers and did a sensible choice of being an accountant. But I think in terms of when it became like a formal business was when I would help my friends do their numbers. Just, like they'd complain to me all the time, oh, my number's this, oh, I can't afford this and blah, blah. I'm just like, what are you guys talking about? And I just get my laptop out, do a quick spreadsheet, boom, boom, boom. I'm like, yeah, you can just do that. And they were like, oh, wow, this is amazing. For me, I just thought that everybody did it.
Yeah.
But it wasn't the case. And so, they encouraged me to make it more formal. And so, I just went onto social media and started talking about it and emphasizing the fact that I was actually an accountant. If I'm honest, I think that the things I do don't really require my accounting qualification, but I don't think people would listen to me if they didn't know that I had a certificate. So
So you're an actual accountant. You have clients. You do the, I don't say boring stuff, but
I do the boring stuff. But I'm trying to make it fun. So that's why I tagged myself your favorite accountant.
Good,
because no one likes to talk to an accountant, but I hope you like to talk to me.
Well, no. Well, I have a really bad experience with accountants. Actually, my most recent one is great. However. And I hope my previous accountants listen to this because we had a really terrible split. They were terrible for all sorts of reasons. But
I hear it all the time.
That's the Patreon version of the podcast. We'll get the stories. We don't have a Patreon, anyways. But I should say as well, the way I came in contact with you isn't just from your accountant, it's from you talking about accounting.
Yeah.
I jokingly said you're the most famous Benedicta in London, but it is the case that when I type in Benedicta on YouTube, you come up.
Oh, that's good.
Because you were on this podcast talking about finances, taxes, the UK tax system, and it's got over 500,000 views, I believe. I'm sure on other social platforms it has, the same, if not more. How have you responded to that? To, doing your accountancy stuff, and now 500,000 people have seen you talking.
It's quite crazy. Definitely in London, when I walk around, people give me funny looks, and I know they're waiting to say, "Are you Benedicta?" And I'm like, "Yes, I'm Benedicta." And I think people are quite shocked, because I guess when something goes viral, you think that the person is some famous celebrity with security or something. I'm just like a normal person walking down the road and
Literally.
are you Benedicta? Yeah, I'm Benedicta. I think I saw you. Yeah, that was me. So that's quite interesting. But in terms of from a business point of view, it's been really good because it's if I'm honest, the place where I spend most of my time is on Instagram in terms of content and all of that. I do post, occasionally on TikTok, and I used to do Twitter a bit, but mainly on Instagram. But obviously there's only a certain kind of demographic on Instagram.
Yeah.
So now with YouTube and that coming up, I've had a new wave of clientele, which has been really exciting, different to my normal customers. So that's been really, really good. And good for business. And
Things are looking up. Let's start at the UK culture, because I thought to myself, okay, cool, I've got this famous accountant coming on to talk about money and how to think. And it's interesting because money, I think it elicits sort of 2 responses in people. One is they're like, hell no, I don't want to hear about this. Money gives them anxiety. They sort of, turn off the podcast. And obviously, if you're still listening to this, you're not part of that first group. The second group is people who I think just are very sort of, they just lie, to be quite frank, about money, right? And I wanted to start here because I think in the UK, we've got this extreme culture. One, we never talk about it. So a lot of people, I remember talking to someone you may know, Timmy. He's a finance educator. He was talking about the fact that a lot of parents just pass on terrible habits to their kids. They never really explain to their kids. So you got one group who don't talk about money. And if you log onto Twitter, there's another group who talk about money all the time, but they're just lying. If you're not on 600K by the age of 21, you're a failure. Wake up. You need to. So I guess, when you think about the UK and the culture we have around money, what are your thoughts, especially because you sit down with people and go through their finances as well? What's the reality
So I think you're right. Like there's always I think, and that probably applies to everything, like health as well, right? There's people who they just block their mind and they eat junk, do nonsense. And then there's also like crazy fitness, geeks, calorie counting and all of that kind of stuff. So I think it applies to everything. But with finances, I definitely think it might be a generational thing. So I definitely think like parents' generation, I think that they probably didn't understand it. And it's kind of like a bit of an embarrassment if you don't understand it. So it's like, okay, we'll just do our own thing. Maybe husbands and wives talk to each other and that's about it, if that. So it's like just doing that, and then keeping up with the Joneses was very big in our parents' day. Having said that, I think that even in this generation, there are probably some still keeping up with the Joneses. But the thing is about this generation is that we have the blessing of the internet. So you don't have to admit to your friends and family that you don't know it. You can just go on Google and type, I don't know about finances, or, whatever it is you want to know.
Yeah.
And so because of that, what that has meant is that more and more people can talk about it neutrally. So for example, yes, I'm an accountant, but do I talk to my family member, my immediate family members or wider family circle about their finances? No, I don't.
Interesting.
I talk about it on the internet. I talk to my brother who likes finances. I do talk about it with like my immediate family, so my siblings, of course, my husband. But when I extend it, I mean, like, for example, like my cousins and my aunties and my uncles, we don't necessarily sit down and talk about their finances. But I don't have to talk about it with them. I can just go on the internet. I can come here and talk about it on a podcast. If you want to hide and listen to me, you can do that. But basically what I'm just trying to say is that before, without the internet, who are you going to talk to, right? If it's not your friends and your family. Whereas now there's many avenues of expression.
Yeah.
Number one, for those who like it, to talk about it. And number two, for those who don't know about it, to also research and find out about it from whoever they want to on the internet, right? And so I think the millennial generation, the one before, I'm not sure about the next generation. So I've got two much younger siblings who are Gen Zs.
Those Gen Zs.
They're very interesting. So like there's 4 of us. So 2 of us are millennials and 2 of them are Gen Zs.
Team millennial, yes.
Yeah, it's very interesting. They're a little bit interested, but I think they're still quite, I don't know. It might be a personal thing.
Do you know, it's really, really hard to really put them in the box because they're all so different.
They're still evolving.
And they're evolving. And I think they, I remember a world without social media, whereas they're online natives. They've been marketed that their whole lives. They've lived in the sort of ecosystem of the internet. So I do wonder the effect that will have on how they think about finances. I don't know if they talk about it openly.
So like my Gen Z siblings, we do talk about money, but their approach. So whereas me and my millennial brother, we are very much, save, invest, buy assets, right? Generally speaking. We do spend money, of course, as well and have fun. But they are more spend, have fun, do all the cool things that you like. And maybe just save a little bit at the end.
Correct. They seem to have a lot of stuff. So the order of priority
is different.
Yeah. I was talking about, again, I at risk of sounding like 2 old heads, like moaning about young people. I do remember talking to a younger sort of brother of mine about the fact that, he told me the job he had, which was, he had a temporary job, sort of just, working a sort of low skilled, just something to pass the time. But he had like a Mercedes and he had like
the Mercedes.
And I just thought to myself,
Mercedes.
How are you? Yep. How do you have?
Yeah, this is what I'm saying about priority. So millennials will do the investing, saving assets. But like I remember one time I've had Mercedes before. I remember one time my Mercedes was getting old, but I was like, until we buy another property, correct, I am not changing this car. I don't care if this car stops working. Yeah. The first priority is the asset before the liability. But like you say, I have a millennial sibling who knows himself, who has a good job. Don't get me wrong. He's not a bum or anything. Like he is working, he has a job, he is responsible, but he will definitely put the Mercedes before the asset. And I'm like, I
don't know. I want to learn from them because obviously they are enjoying their life. They're not, in the future, I'm going to do this because who's promised the future, right? But at the same time, even on that, I mean, we can even park the bus there. You said in passing that one should invest in an asset before you get into a liability.
Yeah.
What does that mean for someone who's listening, who's going, that sounds interesting?
Okay, so an asset is something ultimately that you're buying that will give you a return, right? So it will give you either profit, it will give you some kind of, or it will appreciate in value. So for example, when you talk about investing in assets, of course, the basic one that everyone always talks about is like property. But even aside from property, there are people who invest in gold, for example. You buy gold, or even buying Bitcoin. And let me not say Bitcoin, but buying some coins. People see it as a form of asset, right? Because the idea is that you're holding on to it, it's going to increase in value, and at a later date, you can sell it for much more than you bought it. And so even down to things like artwork, right? Some people buy wine. There are different things you can invest in. Ultimately, for the price to increase, even like buying shares in a company, the idea is that you want to have something that you own, and at a later date, you're going to sell it, get rid of it, and it's going to have increased in value. That I personally recommend that everybody prioritizes having that over a liability. And so you heard that I called the car a liability. Why? Because at the end of the day, no matter how flashy, how expensive, how wonderful your car is, unless it is vintage, which we're not talking about, the moment you start to drive it, it reduces in value. The moment you take it out from the shop, it reduces in value. Over time, yes, it will not necessarily go down to zero. So at some point you can sell it in the future. If you bought a car for £15,000, for example, in 5 years' time, maybe you'll be able to sell it for 10K. So it's not going all the way down to zero, but it has decreased, right? Yeah. Which is fine. Like in life, we have to buy liabilities. Don't get me wrong. I'm not saying you should never buy liabilities. Things will decrease in price. You're using it, right? So you're using the value of the car, right? But with a house or with assets or with gold or with shares, the idea is that in 5 years' time, rather than have decreasing from 15,000 to 10,000, your 15,000 might now be 20,000. Yeah. So for me, when you prioritize increasing or buying assets first, it means that when you then buy liabilities, you're kind of offsetting the loss by the fact that you also have increasing assets.
Yeah, and that's a really good starting point. Again, speaking to some younger people, and I would love you to speak to this, their fear, if I could channel my inner Gen Z, is, okay, that's great. Of course, a house is an asset, and that's the most important one. You go on social media, you can't escape people talking about it. However, it feels like such a big asset. And it seems like the system isn't really set up for you to be able to afford that asset. So why don't I just enjoy myself, essentially?
So this is the thing. You don't have to buy a house, right? Nothing in life is compulsory. You don't have to buy a house. Taxes. Yeah, taxes, that one's compulsory. You don't have to buy a house. And you're right. A house is a massive asset. It takes a long time to save for it. Even when you get it, it's a big responsibility, blah, 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 blah. You can buy other things like investing in the stock market, buying shares, S&P 500, that kind of stuff is another way of and you can invest from as little as £10, £100, £20, whatever you've got. So if you are investment minded, investment thinking, there is a level at which you can invest without you having to break the bank or feel like, oh my God, this is so overwhelming. And even before investing, savings. So for me, investing is the next level after savings. Before you even start investing, you should save, right? You should have something for a rainy day. Life happens, emergencies will happen. And so for me, I also think that one of the foundational pillars for like managing your finances, we talk about budgeting, but one of them is having a savings culture. When you get money, you should have a culture whereby, okay, I've gotten £100. You're not thinking of how to spend the entire £100. Like you need to save some of it. Yeah. So you should have a culture of saving for the future, for when an opportunity presents itself. You want to be able to play, or even just for a rainy day.
Yeah, that's really good. Yeah, it makes a lot of sense. I just wonder, still speaking to that Gen Z who goes, well, Benedicta, I was watching a podcast of yours and you said the UK tax system is designed for everyone to be on the same level.
Yeah.
What's the point in trying to grow my assets if the government, the man, is going to keep me down anyways?
The idea of me talking about things like that and saying things like that is so that we can be awakened, right? And so we can know. You can't beat a system that you don't understand. To win the game, you have to understand the rules of the game, right? Everybody, whether you're playing chess, Monopoly, football, tennis, whatever, you first of all understand the rules, and then you say, okay, but if these are the rules, that means I can do X, Y, Z, right? So you can win. Yes, the UK tax system is designed so that you're not, it doesn't inherently want people to be above others. But let's be realistic. When you look around, do you not see that there are people above other people?
Yes.
Do you not see that some people are earning more than others? Do you not see that some people can afford flashier cars than others? Some people can go on better holidays than others, or can go on holidays more often than others. So the idea of me speaking about finances is to expose so that you can understand, and then you can then do better. So yes, you ultimately, you know, the system is going to try and tax you the more. But one of the things, and I think this is a big misconception that I get from customers as well, they always ask me about this thing, you know, going into the 40% tax bracket, which is a higher rate band. So anybody who earns over £50,270, every penny after that begins to be taxed, or every pound after that, I should say, begins to be taxed at 40%. And so they say, oh, I'm just going to stay at 50,270 because then my money will be taxed. And if my money is taxed at 40%, that means I lose. No, although it is going to tax you more for every pound over, the first part is still taxed at 20%. So you're still keeping that 50,000 at the 20%, obviously minus your personal allowance, which everyone gets up to 100K. So for me now, the question is, would you rather stay at 50,270 for the rest of your life? Or would you prefer to earn an extra 10,000? So let's say you earn 60K extra salary, but you get to keep, instead of keeping the 10,000, you keep 6,000. At the end of the day, if you decide to say, I'm going to stay on 50,000 rather than 60,000 because of the 40% tax, me who has decided, or I who have decided to take on the extra 10K and allow them to tax it, I've got £6,000 more that you don't have.
Yeah.
And that's £6,000 for, I don't know, a holiday, new sofa, new TV, whatever it is you want to buy, new car. That's £6,000 more. I would rather have more than have less, even though they're going to tax it.
I get that. And again, I think I'm in the same bracket. I'm just trying to think about folks who may struggle with it, because I guess there's two impulses that may come from that reality. One is, okay, how do I hide some money, some money from these people? Right? How do I?
Yeah, there's always that.
There's always that, which we can talk about.
Cash in hand.
This is it. Or how do I set myself up to be able to take advantage of all the different, whether we want to call it loopholes or gaps, or whatever you want to call it. So I guess if we tackle the latter first, what are the ways, just generally speaking, young people who, again, a lot of listeners, graduates working in the first 10, 15 years of work, what are the different ways we can organize ourselves to just be able to sort of save more of our money? So
one of the things at that 50,270 mark where you cross over into being a high rate taxpayer, that is normally the mark where if you have a business or other income that you should have been declaring as, you know, on your income tax, on your self-assessment, not doing cash in hand, that's where we recommend to open up a limited company. So when you open up the limited company, you can put the money in there. The tax rate of a limited company is 19% compared to 40%, right? Of course, there then becomes a discussion in terms of how to take the money out, because you can't just start spending. You can't pay for your rent. You should not be paying for your rent from your limited company business account, or paying for personal things, your hair, your nails, and all of that kind of stuff. So there's a question about bringing it out. But ultimately, that is one of the ways that, you know, the rich hide their money, right? I won't say hide because it's in plain sight. You still have to do your accounts. You will still pay some tax. But of course, then the next level after opening the business is then knowing what eligible business expenses can I take out, or what things can I do? Anyone who, I did a free webinar earlier this year, had about 300 people in attendance. Amazing. So anyone who attended that will know what I'm talking about. If you haven't, you know, send me a message and we'll see how we can share the link. But one of the people that I brought on, one of my customers, she's a high rate taxpayer already, but she also has a limited company on the side. So she's taken the step to not just earn the money in her name and getting taxed unnecessarily. She's taken the step to open up a limited company. The next thing she's done is, where she has earned quite a lot of money, rather than allowing that money to even just sit in her bank account, her business bank account, she's contributed that money into pensions. When you put your money into pensions, that is an eligible tax expense for you as a company director. She took her profit from 25,000 to zero, and she didn't have to pay any tax. That's an example of what some of these people do. And there are other things as well.
Yeah, I mean, I remember speaking to a wealth consultant last year, and they told me about early last year. Again, I was so shocked I learned this so late. They were like, you know, but if you pay your profits into your pension, like,
It's legal. It's not illegal.
I said, what?
Yeah, you
then
can
you don't
put
get
in
taxed on that,
exactly,
right?
and you can put in up to £60,000 every year.
Which is,
and if you didn't use your allowance from the previous years, you can roll that forward as well.
your point about knowing the rules is everything.
Yeah.
Because the way, and a lot of people who feel fear and anxiety about their accounts, it's akin to me like to play Monopoly, but you have no clue how it works. So imagine just being spanked around by all your friends and you're just like, what?
You know, they're like, go to jail, go to jail, go to jail.
You're like, what do I do with this?
Miss a go. Yeah, exactly.
This is it. You forgot to collect your 200 when you filed the go.
And this is why, for me, right, what I've done, and this is why I say your favorite accountant. Most accountants that I have seen, most of them will do your tax return for you. They will do the letter to HMRC. They will do the return to Company's House, right? But they will not explain it to you. And so in the last 3 months, I and the team have worked tirelessly. I have launched a whole new set of courses so that people can understand, because I realized for the past 6 years that I've been doing accounts for people. Yes, I have conversations here and there and people can listen to me on podcasts, but I realized the actual standard or average business owner who might even be earning 100K. I have business customers who are earning 6 figures from their business. Yes, they're earning this money, but they don't actually understand what I'm doing. They don't actually understand what they should be doing. Yeah. And so for me, in Benny Ratio, as a customer, number one, as my accounting customer, I've given you all the education. I've recorded it all. Listen, watch it, so you can understand, like I say, the rules and what to do and what to play. And even if and which I'm not aware that other accountants do, but even if you're not a Benny Ratio accounting customer, if you just want to learn about taxes and how these things work, I've put it all out there for you, because at the end of the day, education is power. Knowledge is power. When you understand it, then you can win.
I think for business owners, that's a really key message.
Yeah.
When in my first few years of business, I paid my accountant. I made this very clear. I am paying you so I don't ever have to think about this. You know, I said, I don't want to think about it. I don't want to know anything. But then again, when I started having issues is when I said, oh, wait, so what are you doing exactly? You start to go, let me just peep over the shoulder, right? And then when you have a really bad accountant, you learn so much. So unfortunately, I've had to learn a lot when, some accounts were returned because this didn't happen. And I'm like, and now you're kind of like,
and bad accountants will not want you to look at what they're doing as well. If you're ultimately there for the customer and you're doing the right thing, you shouldn't mind the customer coming to ask you questions, coming to ask you or having to explain. But I realized, and this is what I was saying about back to like when I was at uni, the difference between financial accounting and management accounting. Financial accounting is backwards looking. So that's the kind of accountant that will just say, give me your stuff, I'll do it for you. Here you go, it's done, bye. Management accounting is more to do with forward planning, budgeting, getting ready for the future. So this is me walking with you through the year as things are happening. You might say to me, oh, Benedicta, I'm thinking of getting a premises. I'm thinking of getting a new office. Oh, by the way, I'm thinking of buying a car. So rather than you just doing it and at the end you say to me, oh yeah, here's my bank statements, do something. I can advise you as we go along to say, okay, these are the things that you should think about, or do this now. Because sometimes as well, people come to me and they're like, okay, so what can I do? But the accounting is already gone. We can't retrospectively pay from your bank account. Do you get what I mean? And so this is where the management accountant side for me has really I've been able to lay it on as another layer to the financial accounting to hopefully give a better experience for people. Which
is really good. I spoke to you before we started sort of framing this. I don't know when this will go out, but I'm highly confident that we'll still be in a cost of living crisis. Things will still be very tight for people. And so if we're speaking to employees, people, like I said, driving to work, on the train to work, whatever it is, and they're just thinking, okay, do I need to pay an accountant to help me? How do I plan my finances to take advantage of all these different tax codes and tax rules? What would you say if we could speak to them for a minute?
So one of the things, like I just mentioned, would be the education, right? So if you look online, whatever, if you're not sure, I promise you, if you buy one of my educational courses, you will, I have downloaded everything. Like if you thought this conversation or any other podcast, you might have seen me talk about finances, was good or informative, that is a space. I have gone down into all of the details. So first of all, getting the knowledge. Wherever you get it from is up to you. Once you've gotten the knowledge, then you need to take the steps. So I was talking to one of my customers yesterday who they came on the course and they found out about some of the things. So for example, we just talked about pension. They're like, okay, yeah, so this person was paying themselves from their business, 4.5K a month. So every time you pay yourself from your business, by the way, you know that there's a tax implication. So they're paying themselves from their business 4.5K, but then they were then paying into a pension or then making donations. These things they could have done directly from their business. So number one, if they do it from their business, they're reducing the expenses from their business. But then number two, they're reducing, by taking out less money in their name, they're reducing their personal tax liability. So like I say, once you know the rules, understand the rules, then you need to take action, right? You can move things that are eligible from your personal into your business account, set it up in the right way. I talk about, people will say to me, oh, can I pay for my, I don't know, like my internet, for example, from my business, or different things, mobile phone. There's a way to do it. So for example, if you're a business owner and you're paying for your business, your mobile phone from your personal finances, why don't you just put it through your business? That's another expense that you don't have to pay. And so now you're keeping more money that you can potentially use for a night out or something. So understand the rules in that way, and then taking the action. For individuals who are like 9-to-5 employees, particularly for high rate taxpayers, that is you're earning over 50 to 70. You want to be, again, looking at things that you can claim back, whether that be eligible expenses in terms of training costs or pensions or whatever, extra things that you can do that ultimately you can basically get a tax return from it. But I would also always say in a cost of living, not just in a cost of living crisis, in life generally, right? In line with the example that I gave, having more is always better than having less. And so if it's a cost of living crisis, it's not just about saying, okay, I'm not going to shop in Waitrose, I'm going to go to Aldi. It's about how can you increase your money? So whether you go to Waitrose or Aldi, you're still good. So, this is where skills come in terms of if you're in a 9-to-5, how can you increase? The biggest salary increases I've ever had in my life have been from a 9-to-5 job when I have either upskilled. So when I became qualified as an accountant, when I graduated, immediately the next job I got was always 10, 15, 20,000 pound more. When I've moved companies to another industry, find out the high paying industries.
Yeah.
Best believe there are two people. One is an IT support officer, I don't know, in McDonald's, getting paid 50K, for example. One is an IT support officer doing the same thing in Google, getting paid 100K. Find the industry that will pay you the absolute highest for the job that you are doing. Obviously, upskill, do all the things to get promotions and all of that. And then, of course, add to your income, whether that is via a business, whether that is via investments. Obviously, in cost of living crisis, you're thinking more about cash flow now as opposed to later. So yes, you can do investments, but that's ultimately for the future. So if you're talking about cash flow now, then you're talking about high-skilled things that you can do on the side that will give you money now. I personally believe that everybody should have some kind of business or side hustle. I don't care if your 9-to-5 is paying you £2 million a month. You should have a business. You should have another source of income. Yeah. And this is a way of diversifying, right? Because your £2 million a month job can sack you tomorrow.
Correct.
So you want another stream that ultimately you can upscale, work with. And,
I want to pick up the side hustles bit, because I know lots of people's ears will perk up because everyone's got something that they do on the side. Maybe they don't monetize it, but there's something they do. But before we get there, what are some of the most common sort of, tax, I suppose, deductions or allowances that individuals or businesses often overlook that you sometimes, they just don't know about?
Overlook. So we already talked about the pensions one for business owners, also charitable donations for business owners, but charitable donations, not just for business owners, for high rate taxpayers. As a high rate taxpayer, if you're paying 40%, right, on your income, when you give to charity, there's something called gift aid. So the UK government, the way it's set up is that you basically you shouldn't have to, if you're giving to charity, you shouldn't have to pay tax. So basically what they do is if you're a high rate taxpayer and you've given to charity, if you do a self-assessment, you can claim back the 20% tax that you already paid. Because you had already earned your salary, they already took their 40%, right? And then you gave to charity. They are technically owing you the 20%. So let's say you gave £5,000 to charity, but you had already paid 40% tax on that. So they need to give you the 20% tax back. So that's one of the ways you can do it.
And is that only for high rate taxpayers?
Yes, because, well, it's not only, you can still do a tax return if you're a lower rate taxpayer, but it works out because you have paid 40% tax.
Got you.
Now you can claim the 20%.
So when everyone's doing gift aid in church, is it really only the people, only high rate taxpayers that matters for?
When people are doing gift aid in church, they're ticking it
or
for the
other,
church.
Or other religious
other
establishments.
charitable donations, other charitable institutions. Then when you tick the gift aid in an establishment, when they ask you, that is for them because they need to be able to show to HMRC that, look, these people gave £1 or £100, and so therefore they collect 25p for every £1. So that's for their records. But it doesn't mean, if you're a low rate taxpayer, it doesn't mean that you shouldn't tick that. You can still tick that, and that's more for the institution to go and claim back. So they're claiming, and then now if you're a high rate taxpayer, you can also claim.
Wow.
Yeah.
It's just like knowing the rules, isn't it? It really is like learning. And, I have some bad friends when I play new games. They don't tell me all the rules because they want to keep you in bondage. Exactly. So it's good to know. On side hustles, I mean, again, if you grew up in Southeast London like I did, hustling's just a way of life, man. Yeah, it's just, whether it's cookies in school. Is it
the South London or is it the Nigerian?
You know what? I don't even know. Because in my school, I mean, we had a mixture of ethnicities. Everyone sold something. Biscuits, Lucozade, frozen Lucozade. One guy, actually, he innovated. He would freeze the Lucozade so by lunchtime it would become slush. We were like, who's this guy? He's probably a billionaire somewhere now. That level of innovation. Anyways, so hustling is something I guess we're all used to because of social media. A lot of people have built audiences up for different things. Two questions. One is, on a more sort of, I suppose, just philosophical level, do you think everything should be monetized? Like if you just have a page where you talk about your hair care journey, whatever it is, and you happen to have like 10K, would you say, hey, you're sitting on money there? And then two, what are effective steps I should take if I've got a side hustle, something I'm earning some money from? Yeah. I remember girlfriends I used to have when I was younger, so females that were friends, that's what I mean, who would do hair and they'll just take like, the odd £50 on the side. Oh, there you go. It's like, how should they set up a limited company? How should they sort of do that?
So if you're in school and stuff, I wouldn't say you should stress about, the legalities of that. Do your hustle.
What if they come and take you?
No, they won't. Learn your skills and all of that is fine. Maybe if you're earning £1 billion, it's going to your bank account. That might be a bit crazy. But yeah, I would actively encourage entrepreneurship. And this is one of the things as well, because when we go to school, they teach you how to be employees. They don't teach you how to be business owners. When in reality, in the world that we're living in, a lot of people are actually business owners and they've had to kind of struggle to learn what to do, to manage and run a business, even down to the accounting, for example. The accounting I learned in school is different from the accounting that I do for my customers. That's another story for another day. But in terms of what they should be doing if they want to, monetize, and do I think that everything should be monetized? As a person who loves business, yeah, 100%. I don't care whether it's tomatoes or hair or nails. If it can make you money, why not? Because at the end of the day, money makes the world go round. Like money, even the Bible says, money answers all things. Many people in their families have issues, have fights, even between husband and wife, because of money. If you had more of it, you would have less fights. So have more money so that we can focus on other things. So I believe it should be monetized. Yeah. Should you take advantage of people? That's a different thing. Like there are people who are, extorting people. No, I'm not talking about that. But genuinely, if somebody is willing to pay you for a service that you've rendered, and if you are giving your time to be able to deliver that service, then I believe that you should exchange something for it, right? Because also your time is your life. Right. Correct. So you need to be getting something back for it. So that's that. In terms of what you should do. So the rules are you can earn up to £1,000 a year without having to be formally registered.
A year?
A whole year, 12 months.
Okay.
£1,000.
How kind of them.
Oh, so
what
kind.
A lovely... encouraging enterprise.
So £1,000 without being registered. I didn't say without being taxed.
Oh, wow.
Without being registered. So everybody in the UK, and I'm talking below £100,000 earners, everybody in the UK can earn up to £12,570 without being taxed. So the £1,000 limit is for you to register. What do I mean by that? That means you need to let them know. So even if you're earning 5,000 or 6,000, you just need to let them know. They're not going to take the tax. There's no tax implication. Obviously, if you do the self-assessment with an accountant, then you're going to have to pay the accountant. If you do it yourself, By the way, I have a course that teaches you how to do it by yourself. Anyways, if you do it yourself, obviously you don't have to pay anybody, yeah? But this is just about you being registered and letting them know and that's going to be obviously for census reasons, right? They want to know where the money's flowing and all of that. So after £12,570, that's when you will start to pay tax. So don't be alarmed, yeah? In terms of, things you need to do, so register as self-employed. I tend to say if you're earning up to like the 12,570, 15K, etc., you're quite low earner. I say low earner, yeah. If that's all you're earning, you may not want to rush to go and be, a limited company. However, that will depend on if you have other sources of income. So if you have no other source of income, you're just side hustling, businessing on the side, then actually I would say you should stay self-employed up until around 50, 51, 52, 53K. Why do I extend it from the 5270? Because if you do register a limited company, you have the costs of having to run that business. So the accounting fees, it can get a bit expensive. So if you're going to have to pay £1,000, for example, a year to run your limited company and you're only earning 51,000, you might as well still stay self-employed because it will be cheaper. Because, for example, a self-assessment return can be like £100-200 compared with paying £1,000 to run a business. And, the responsibilities. Obviously, there are other reasons why you may want to register a limited company in terms of protection. Are you in a high-risk business? Will people sue you? Is there health and safety risk? So you need to look at that. But ultimately, if you're self-employed, you can earn up to around 50, 51, 52, 53 before I would suggest that you register a limited company.
And that's register yourself as a limited company or just a limited company?
So a limited company. So you can, when I talk about self-assessment, that is you registering yourself. You get a UTR number. This is from the £1,000 and above. Yeah. So you're just saying to them, I, Benedicta, am earning income from other sources. And so therefore, here I need to do a return, right? When you do a self-assessment return, it takes into consideration all your income. So that's why I said, if you don't have other income, you can just do that. But if you do have other income and you're already a high rate taxpayer, then you want to consider looking at a limited company because of the tax benefits that I mentioned before. Keeping the money in there, 19% corporation tax is cheaper than 40%. Simple as.
Got you. Okay, that makes sense. So I'm doing work right now, side hustling. A lot of it is cash in hand. The government can't find it. Why do I need to declare anything? They'll have to come to my house.
Thing to do
already.
It's the right. Look, I'm a law-abiding citizen, and I would encourage everyone to be a law-abiding citizen. So, but no, jokes aside, why would you want to declare it? Because, for example, there are people who earn thousands of pounds in cash, and then they come and say, "I want to buy a house," based on what? Your £0 tax return. So declaring it is not just about them taking the money. It's also about you having a formal way of telling lenders, people, that I am creditworthy, I am eligible, even down to car finance. Like, they're going to ask you for your income. If you're not having a 9-to-5 job, that means you don't have a pay slip. So that's where the tax return comes in, because the tax return now shows, oh, look, see, I filed to the government that I earned 50K last year. So I'm eligible for a mortgage, or I'm eligible for a loan or credit or whatever. Somebody might say, oh, I don't need credit. That's fine. That's up to you. But yes, they can also investigate. And please be rest assured that HMRC has a whole investigation unit. So if for any reason they do think that you are having cash in hand, they can follow you. They can, do different checks and stuff. Oh, wow. And not just that, like even
I've got to get a disguise.
Even down to simple things like renting a house, right? Even if you're not buying, you want to rent. Even the estate agents will ask you for payslip. Like why should even me as a landlord, I have properties that I rent out. If you come to me and I can't see any evidence of your income, I'm not giving you my property. So tomorrow you can say, please, please, please beg. No. Like, I need to know that you have income coming in.
Show me the proof.
Show me the proof. How are you going to survive in this country? Even down to opening a bank account. Like, there are bank accounts, they'll ask you, so how much do you think is going to be coming in? You have to have some paperwork. Like, we live in a civil society that operates on paperwork.
This is good. And this brings me to two scenarios that I want to present you with to get some advice on. No, they're all very, very, very normal, I suppose. Because, when I was talking to Timmy, who, again, we've done the episode, I suppose, last season, something like that. He said something really profound, I found, where he said, if you don't check the time ever, that what's going to happen. And obviously you're just going to be late everywhere. You have no clue where to be, whatever. And so he was saying, people who don't check their finances and know what's going on, they can never manage their they have no clue. They can't build plans, strategize, etc. They just find themselves in this endless loop of just somehow I'm surviving, but again, I don't know what's going on. And those are the people who I hope these sort of episodes help. Obviously, if you earn 150K and you landed on this and you've learned some things, or you want to now book Benedicta, go for it, like go happy. But there are people who I think are probably ashamed or feel like, I really should have got on top of this by now, who I'm really hoping some of this advice helps. And so that brings me to the first sort of scenario, which is of somebody who maybe they're 25 years old, they've been self-employed, they've got a range of different skills. They have been being paid cash in hand for a long, long time. They just go into a relationship and now they're like, okay, I'm 25, I'm in a relationship now. I want to now start thinking about buying a house, settling down, etc. But so far, I haven't registered anything. I've just been cash in hand. I have a bank account I had when I was in a youth, whatever. If I now register, they're going to go back to all the work I've been doing since 20 and slap me. So what should that person do who is now thinking, okay, I want to now start declaring all the stuff I earn?
So there's a phrase I've heard from like one of my mentors, and they talk about no matter how far down the wrong path you've gone, it's never too late to start to do things right. So wherever you are, you can start from today. And some of my customers will know we've had conversations about this, and they're like, Benedicta, we can't go back all these years. And I'll be honest, I will just register you from today. At the end of the day, touch wood, fingers crossed, and all of that kind of stuff that they say, blood of Jesus or whatever else you believe in, fingers crossed they don't go back. But you can, if you register today, we would say from 2024 onwards. Yeah, so they might not necessarily investigate going backwards. And, you can say the whole thing about, I didn't know, I only found out about whatever this year. I personally have not seen any rule on paper where HMRC have said, if you register this year, then we will then automatically start looking at all your past finance, history. I've not seen that. And so I've not experienced that. So I would say, don't be worried about that. I would say, go and register straight away and begin to do things right from today. Get the education, speak to an accountant, speak to whoever. If there is someone in your family that you trust, speak to them, okay, what should I do now to put things in order?
And how will they register if they wanted to register?
So if they want to register, you can register. So literally Google is your friend, but you want to be looking for gov.uk websites. So gov.uk is the official government website. So you can trust the information on there. Obviously there's loads of people online who might give advice that might not necessarily be right. So just make sure it's a gov.uk website or a HMRC verified page, right? And so you can say register for self-assessment or register a limited company, whichever one you decide. Or again, if you don't know, and I always say, it's so funny because some accountants probably don't like me for saying this. Do you know it's not a legal requirement to have an accountant? You are allowed to do your tax return yourself. You're allowed to do your accounts yourself. You're allowed to do all of these things yourself. It's not compulsory. But the reason why there are accountants is because obviously for some people it is hard, right? There's a lot of information. It's difficult. You might not understand it. So if you can do it yourself, go for it. If you do feel like it's confusing, I'm not sure, then speak to an accountant who will help you. Any accountant knows how to register a company or register you as self-employed and can give you the right advice and point you in the right direction. So get the professional help, basically, if you need it.
Good stuff. Very helpful. The second person is trying to optimize their tax situation because they're planning for a significant life event.
Yeah.
So, they want to buy a home. They want to get married. They're thinking about retiring.
Yeah.
What's the general advice? Of course, a lot of these things, people have to come to you and give you specifics, right? But if you could speak to that group generally who've got a big life decision a few months ahead or a few years ahead, what are some of the ways they can optimize their situation, tax-wise and just sort of, management-wise?
So the truth is, for those kinds of things, whether it's a wedding or, a
Nigerian wedding, I should add.
A Nigerian
or an Indian wedding.
I think Indian ones, top Nigerian ones.
Yeah, they do.
Weddings, house purchases, all of that kind of stuff. At the end of the day, it is personal expense, right? So it's not like you can put your wedding on your business.
Business conference.
Maybe.
Annual summit.
Annual summit, right? So it's not like you can put that on your business. So it is a personal expense. So the key thing is I would actually say you want to just be upping your income and saving for it. That's the truth. Like that's what savings are for those life events that you want to do. So yeah, upping your income and saving. I'm trying to think what else from a tax point of view. With property, if you have this is probably for the more advanced people. If you already have a property in your personal name, you or your spouse or your partner, whoever you're with, and you're planning to buy another property, it is often advised that you do it via a limited company. Let's say you're trying to go into buy to let. So there have been people who have bought multiple properties in their name. And what it means is that when they're renting it out, the income that's coming in is then being taxed quite highly. So limited companies are good for getting into multiple property purchases. And so setting it up as a business, that way you can buy and sell all within the business without having to pay the personal tax that will come with that. But other things like weddings, it's personal. So yeah, you just got to save for it. Do a cheaper wedding. Do a cheaper wedding. You just got to save for it.
On the housing, I suppose someone might ask them, well, shouldn't I just buy, if I have a business, shouldn't I just buy with my limited company? Yes,
that is something that I always get asked. So there has to be a valid reason. When you register a business on Companies House, there's something called a SIC code. And that SIC code is about what is this business doing? So you have a business that's a hair business. You have a business that is a construction business. You have a business that is, I don't know, a writing business for books. You know, those SIC codes determine the kind of transaction or business operations that business is supposed to do. So if you've now said your business is all about helping people publish books, why are you buying a residential house and why are you living in the residential house? It doesn't add up, right? So, or unless you tell me you're buying an office, then you're buying an office to do.
That's a commercial property, right?
And that's a commercial property, or you're using that office to somehow do some kind of, like, it has to make sense, basically, which is why you also have a SIC code for buy-to-let businesses, right? Estate agents and property developers. There are SIC codes for that kind of business. So you need to open up a business that allows you, or, states clearly that is the kind of trade that is going on in that business.
That's really helpful. Very, very helpful. Well, those are two groups of people that I hope someone listening to this falls into. And again, like I said, it's with what you do, the more specific details people give you, I suppose, the better advice you can give them. So we can only speak generally. I want to end with you just reflecting on sort of the UK tax system in general. Like I said at the start, you spoke about how it was designed a certain way. A lot of people now, especially because of social media, we see what's happening in America, we see what's happening in Dubai, we see what's happening in Saudi, and more people are like, maybe it's time for me to pack up shop and just head over to America because it's going to be better for business, or Dubai where I'm not going to get taxed personally. I know they're bringing in sort of a corporation tax now. What do you think about sort of other countries when you think about making money, earning money, and keeping money?
Honestly, I know quite a few people who have moved out to Dubai, and I'm so happy for them. And I would love to join you in Dubai.
Okay.
I don't know if I should be saying that, but some of us are guided by other things in life, not just money. But I think if you want to do for it, go for it. Why not? Like, why? Absolutely, why not?
Do you think this is the best country to sort of
the
make
UK
money and keep money?
The UK is one of the highest, most taxed countries in the world. But that's also because of our system, right? So what I've said about the UK is not designed to make you rich. That's because we spend heavily and we invest heavily in people who might be unemployed, who might be sick, who might be vulnerable in society. So the elderly, we have a decent pension system. I say decent, obviously I'm not a pensioner, please don't shoot me, but we give something back, right? Like the NHS, yes, the NHS is not the best anymore, but it's better than nothing. There are some countries where if you don't have no money, you ain't getting no treatment. So we have the country set up in that way, even down to roads, even though I'm always complaining there's potholes in the road. You can't compare it to some countries where there is absolutely nothing. So that is why the country is like that. They ultimately take from the richer and give to the poorer. And so that's why the country's like that. And so for some people though, they will prefer to have that safety. So when you're going to other countries that might have less tax, obviously there's pros and cons to everything. And so a lot of people like to do, even though Dubai is there and America is there. The UK is still considered as one of the most financially stable countries, and the pound holds its weight across multiple currencies.
Yeah.
So because of that, people like to do business here. It's a safe place. You know, you're not just going to wake up tomorrow and the stock market has just crashed for because somebody's done something dodgy. We are highly regulated. There are rules in place. The president is not just going to steal the people's money and jet off to Maldives or something.
Well,
do you get what I mean?
Unless Liz Truss comes in for a while.
Exactly.
And,
so yeah, that was a scandal. But you know what I mean? And so ultimately you have to look at the pros and cons of everything. And so for the security and the stability that we have, we pay for it in terms of taxes. You can go to other places that are much more liberal and you can enjoy yourself. But it's funny because I was sitting with someone who lives in Dubai, who moved to Dubai, a close friend of mine. We were literally together in Dubai last December and we were talking about this and she's like, do you know what? I don't think I can stay here forever though. I think I'm going to come back home at some point.
It must be hard to build a community if you're from
London. So there's quite a lot of expats out there, quite a lot of British people, quite a lot of Americans, Canadians, like all
Americans
kinds
are
of
everywhere.
people. Yeah. So even when we went out in Dubai, we went to this place, Time Out, and there were loads, like you just hear all different accents. Like it's like a universal world. But obviously as they say, there's no place like home. So yeah, some people do end up moving back. But if you can make your money in another country and, you know, benefit from it, why not?
I love this. Love that. Well, there's a new tradition I want to start on this podcast, which is we ending with what's something we should be talking about that we aren't really talking about right now.
I'm so glad you asked this question because I've been looking for a way to drop this in. I want to talk about life insurance, please. I am not a life insurance provider. I'm not a financial advisor. I'm an accountant. But I want to encourage everybody to please get life insurance, especially in certain communities. GoFundMe and begging family members for money for your funeral is not acceptable in 2024. It is no longer acceptable. In fact, if you say that you can't afford life insurance or you don't have assets or you don't have money, that's even more reason why you need to get it, because people who have money will actually be able to pass something over to their children. If you don't have anything, you talked about if you don't ever check the time, you know, you'll always be late, you just end up rolling around or whatever. If you don't ever check your money, you leave your children and your family members in a very, very bad state when you pass on. And we talk about life insurance. You don't get life insurance because you're going to die. You get life insurance because the people you love are going to live when you have died. And so I think that that's very important, even down to if you're a young person and your parents say they can't afford it, pay for it for them. That's how important this is to me. So yeah, thank you for asking that.
Thank you, Benedicta, for being on here. I really love this. And I think there is ample wisdom in this for anybody who wants to take this on. So keep doing your work.
Thank you for having me. It's been fun.
This is great. Look at this. Thank you so much. So if you like that video, there is one way you can help us. And you know what it is? I want you to hit the subscribe button. We are trying to get to 20,000 subscribers. As we get there, and as you subscribe, we can bring on more guests. We can level up the production of what we're doing. And it's the one way you can ensure that we can keep creating videos like this in the future. So do it now. Hit the subscribe button, turn on your notification bell, right? But also drop me a comment. Let me know if you like this video, if you want more things like this, you know, and that way we can keep learning. So thank you so much for supporting us. See you in the next video.